We welcome in Fox Business personality and founder of WStreet.com, Charles Payne joins us. Charles, how are you, sir?
I'm doing pretty good. Thanks a lot.
You know Miss America, but you'll do.
I'm okay.
All right. Now, of course, it's the first Friday of the month, and that means that the jobs report, the numbers came out, and I laugh. It's 175,000 jobs added in the month of May. Unemployment ticked up to 7.6 from 7.5, and the market loves it. The economists and all the analysts are saying it's great news because it's more than expected. So let's address that first, but then also let's talk about the fact that unless we're at $250 a month, we're never going to get out of this, are we?
No, we're not. And you would think that we would be at that number because we've always gone to that number. It's something that, I mean, we've gone beyond that number. It's amazing what's happened, and here's the sad part about it. I don't see where we can actually ever have really big time numbers with the sort of rules in place already that with the president's agenda. Now, the good news though is if nothing else comes online, if there aren't any more taxes, the browbeating is going to continue. That never goes away. Then maybe we'll settle for what we got now, and because our expectations are so low. We actually have found ourselves celebrating mediocrity to your earlier point. But, the real robust numbers, the 300,000s, the 400,000s, the million, Reagan had one month where we did 1 million jobs in a single month. And that's pie in the sky stuff now.
Yeah, no, absolutely. And, again, it's a funny situation, though, with the market reacting. Last look, the market was up. It was up today well over 100 points on the Dow. And that's because they're happy that it's not too good and maybe happy that unemployment ticked up just a bit because that means and that indicates that the Fed is going to keep pumping money in to keep artificially propping up the market. So they're happy when the news isn't too good, but and people read that as, here are the numbers, the market's reacting good, so everything must be good. But if things were really good, the market might go down.
Well, it might go down, but ultimately we want things to be good because at some point, if you have a strong economy, then you have a strong stock market. And one of my bigger problems, is the fact that, Wall Street and the way it reacts and the moving a punch bowl and you have these sharp declines. I think what happens a lot is people don't get a chance to see what happens later on, and when the dust settles, you may have a sharp decline, but if they could actually pull the punch bowl away, and I'll point to 1994. The Fed had rates were like over 9%, 9.75%. In 1989, they started to drastically drop rates to the point where they got to 3%. They kept them there for a year, almost 2 years, so that the banks could make money. You borrow at 3 and you buy bonds that pay 7, no brainer. And then Greenspan said, golly, you know what, I kept them too low for too long, and he started to raise rates. And so in 94, he raised them 25 basis points, 25 basis points, 25, 50, 50, 75. You can sense urgency and panic. The market, the first time they raised rates, was the high of the year. It didn't crash, but it went down. And 94 was sort of a lost year. But 95 was up, 96 was up, 97 was up. So I would welcome the ability of the Federal Reserve to pull away the so-called punch bowl, even though I know that initially it would lead to a lot of a rocky market, a pullback. But, man, wouldn't it be wonderful to think that this economy could make it on its own without any help from the Fed?
Yeah, and eventually that's going to have to happen because the artificialness of it all, if you will, just can't sustain forever. Now, the way folks are reading this is a new CBS News New York Times poll that was just out, and 60%, although it's down and it's gotten steadily better, but still at 60% say that the economy is doing badly as opposed to 39% which say it's doing well. And people are still not all that optimistic. They're more optimistic, but overall it's a terrible number of people who are optimistic about security and the future of their jobs.
Well, they have to be. I mean, you really have to be. And it's so funny you mention that because a couple of weeks ago we had a consumer confidence number, and everyone said, wow, that's the best number like 5
I remember
or 6
that,
years.
Yeah,
but if you looked at the number, people were still overwhelmingly afraid that their salaries weren't going up, that the jobs wouldn't materialize. Main Street gets it. Main Street knows. It's so funny. The Wall Street guys, in my mind, often don't know. They look at they do a lot of calculations, but people in the heart of it, in the thick of it. They actually know the deal, and that's exactly where we are. And I don't. There's something to be said about self-fulfilling prophecies when it comes to the economy.
Yeah, no.
And by the way, that's part of what the Fed's trying to do. Listen, I'm not a fan of the Federal Reserve. I'm not a fan of money printing. But for the audience to know what they're trying to achieve is what they call a virtuous cycle. And part of that is, your assets inflate, your home is worth more, your 401k gets better, so you kind of feel better. You go out, you shop, you go to the shop, and the shopkeeper hires 2 more people. Then they go out and shop, and you know what? Now you've got this cycle, and it's going around and around, and we all feel fantastic, except we don't.
Yeah, no, absolutely right. And you mentioned, as long as there are no more surprises and all that kind of stuff. But businesses are not going to hire. We heard reports. I remember when the last report came out a month ago, it showed that small businesses especially, were not willing to go over that mark of 50, I think, for having to qualify for health care. They were even cutting to make sure they weren't over that mark. We're awaiting 2014. The chaos is only due to set in. So businesses don't know what it's going to cost them, what the premiums will be, how they're going to provide for their employees, and whether or not they'll qualify for that. So I just think we haven't even begun to see businesses not hire yet.
You're absolutely right. And small businesses are the engine. They're the absolute engine of recovery, entrepreneurship. But it's across the board. It's even beyond economics. People aren't getting married. We're not having kids. We're not buying houses. In the top 100 metropolitan areas, it's cheaper to actually own a house than to rent, but people choose to rent. And it's just this overall feeling, that malaise out there, that big dark cloud you're talking about. And you start to scratch your head. Again, this is common sense, Main Street stuff. All right, saying that someone has access to insurance because now all of a sudden it's in an exchange doesn't mean a person who can't afford health insurance today can't afford it tomorrow.
Right.
So when you start telling me about tax credits and other gimmicks, now what you're telling me is that you're going to take money from someone who earned it and give it to someone who didn't.
Absolutely. And there was a poll the other day about the people in California showing how many don't plan to sign up for health care. And Obama was in California today. He was basically pleading with people, make sure you sign up. They're not going to sign up.
They're not going to sign up because, okay, there's a reason I don't have health insurance now. I can't afford it. Oh, you're going to put it online? You're going to give me an exchange? You're going to give me a variety of things I can't afford? And
I'll sell my car and I'll buy health insurance.
And if these so-called tax credits don't pay for the whole thing, I'd rather pay the fine.
Right, I hear you.